Welcome back to Fast Market, everyone. Kevin Hinks back here for our cash tag segment. Along with Joe Mazzola, now I'd like to bring in the co-founder of Likefolio.com, Mr. Landon Swan, to the show. He's going to talk about all these fast food items and companies that we love so much. Landon, you've got data on not only Domino's Pizza, but you've got information, data on 8 fast food chains, a wealth of knowledge. Give us your presentation on fast food in general. How do you see the current market as we know it?
Should be illegal to have an earnings report on a Monday morning, but it is what it is, right? So we'll deal with it. But when we look at Domino's, you got to compare it to all the other fast food companies. That's the first thing that we think about here at Likefolio. What are consumers saying? Are they happy about the product? Are they excited about going there or ordering the product in a lot of cases with pizza? So yeah, if we can bring up that scatter chart that shows all the different companies, I think what you're going to find here is that one of these is not like the others, right? I mean, you've got, of course, there's a difference with the happiness levels, with Yum Brands being the lowest and Shake Shack being the highest. But they're all pretty aligned on the left to right axis. And just so the viewers understand what we're looking at, that x-axis, the left to right axis, is the change in purchase intent or consumer demand for these products or for these companies' products. And the y-axis, the vertical axis, is how happy the consumers are with these products. So, you want to be to the right and you want to be up. So top right is ideal, bottom left is not. But overall, you want to be one or both of those. But Domino's is the outlier here. We actually have a decrease in consumer demand, where the rest of them are pretty much around zero. Like they're right there. Jack in the Box is fading just a little bit, but the rest of them are right on that zero line on the change in consumer demand. Even though they have happy customers, they're the third out of all of these, so that's obviously a positive thing. But it just makes me a little bit concerned. And then when we combine that with the web visits, so if you look at Domino's.com, how many people are going to that website, we actually see that as a 12% decrease on a year-over-year basis. So it's getting less traffic. And I think it makes sense for them to do something with Uber here. I think that's Uber Eats. I think that's a great idea, and it could turn things around. I mean, when we look at Uber data, Uber itself is plus 26% on year over year, but Uber Eats is plus 12%. So both of those, the Uber brands, are bringing more business to their customers. So this is probably a good move by Domino's. And they gapped up tremendously. What was like a 30 or 35 point gap up on that news release? They went from 30 or 350 to, I don't know, 390, somewhere in there. Now we're bumping up against that November, December high of about 395. We're not quite there. We're about 385 or so right now. But it's hitting that sort of that resistance level. So with earnings coming up on Monday morning, again, should not be allowed, but they're doing it. If we were trading at 395 or 399, I'd be pretty confident on a bearish bet. Since we're a little bit lower than that, there is some room. I don't think it's going to gap up over 400. We're a little bit bearish, not tremendously bearish. We're about a negative 13, which is kind of neutral in our world. But if it did happen to run up over the next couple of hours, that would kind of give me the green light to go a little bit more bearish. But that's kind of where we're at right now. If you look at the expectations, revenue is expected to increase about 5%. Cost of goods, cost of sales decrease about 1%. So there's some good expectations out there, and I think the stock is showing us that. But everything that we see as far as consumers is a little bit underwhelming. And so not leaning hard bearish, but if we happen to get a run up in the next few hours up into the 390, low 390s or so, I would be a little bit more confident in taking a bearish bet over the weekend.
Landon, it's like you and I are sharing the same brain and trade on this one, because that's kind of the way I have it set up for the trade with our call diagonal. But let me ask you a question real quick. It's almost as if the Domino's CEO maybe saw your report in advance of this, because, I mean, that Uber Eats deal, what does it do, right? It invigorates a younger, newer mix into their customer base. Not only does it, provide that optionality, but here's what I think is important about it. When you're talking about that younger base, one of the things that they really care about are those app loyalty programs and those app loyalty points, right? So if you're using Uber Eats, you want to maintain Uber Eats. If you're using DoorDash, you want to maintain DoorDash. Now, the deal with Uber Eats only goes through 2024, right? Then that opens it up through, for potential other third-party apps like DoorDash. But is this something that you think is a move in the right direction to maybe reinvigorate that younger crowd to Domino's Pizza?
Yeah, absolutely. You know, this is a company that has really turned itself around over the last 10 to 15 years. I mean, they were a bit of a joke when it came to pizza that long ago, but now they've totally reinvented themselves. They've got, I think one of the best tasting pizzas out there. But one of the things that we saw with COVID was all these food delivery services started to take off. And it used to be, if you wanted food delivered, it was pizza, right? That's it. That's the only way you could get food delivered. But now with all these food delivery services, you could get anything you wanted. And with the trend that we've seen from that kind of came out of that was pizza delivery overall has been in a decline ever since COVID because there's so much competition on your phone now for whatever you're interested in. So I think this is actually a brilliant move by them. I think it's definitely going to lead them in the right direction. They've got to be on there with their competition, and as opposed to, should I call for pizza or will I open up my app and look at 50 different restaurants that could be on there? They've got to be one of those 50. So this is a smart move. I think they had to do it. But again, the data is just not. It's not showing us a big boom yet. I think if there's going to be any kind of positive reaction to this, it's going to be in anticipation of what could be. And I think that's already happened with that gap up. So I don't know what else is going to come out of this earnings report that's going to send the stock, crashing up. I mean, soaring up over 400. I just don't see it.
Well, here's what it is, Landon. I'll give you a theory that I have on this. I think what Domino's Pizza is going to say is this is $1 billion opportunity going forward for us to grow. It may not be the earnings that they get on this number, but their guidance for the future and what this deal with Uber Eats and Postmates does for their growth going forward. I think we've seen a lot of this with CEOs over the last year or so during the pandemic. Mark Zuckerberg, right? He refused to adjust, and look what happened to Facebook stock. This is a CEO that was, frankly, horse and buggy thinking, right? Thinking only his cars can deliver his food. Well, now they've learned through slower sales and sluggish earnings that they got to embrace the new technology and get to a bigger sample size of people. And so I think this could change the projection. Remember, their all-time high is $567. So with the right message going forward, Landon, and I want to get your thoughts on this, this could be a start to a new projection in terms of them because they have now a better story going forward, Landon.
I hear you. I'm thinking, okay, it's been announced. There was a huge gap up, right? I mean, 10% plus gap up on the
Yep.
announcement.
Big.
And there's a lot of optimism in that, just in that move in itself. And so to get on there as a CEO and say, yeah, you guys were optimistic, but you weren't optimistic enough. This is going to be gangbusters. This is going to be so amazing. I mean, you have to be able to back that up over the next quarter with sales. So I think, I don't know. I'm not sure the temperament of the CEO. I mean, is this, if it was Elon Musk as the CEO of Domino's, I'd be like, yeah, he's going to get up there and talk about how amazing this is going to be. And his stock's going to go up over 400. But I just think that it's already kind of priced in. And if you look back at some of the last earnings moves, it's generally speaking, we're $25-30 on an earnings move. And that's what we got out of this announcement. So I think a lot of it's priced in. But that being said, if it did happen to break 400, it could absolutely run. I think the odds are it's not going to break 400 and it's going to, have some resistance up there. So if I was setting up a trade, I'd be selling something, or I'd be selling 400 calls or something like that. But yeah, I don't know, Kevin. I mean, I get it. I can see why this is a huge opportunity for the company, but I feel like the investors out there have already voted with their dollars saying, yes, we already think it's a huge investment. If they come out and sing and dance that all over again, it's like, we've already figured this out. So I don't know. I'm going to be listening on the call. I want to see what they do, and we'll see how our investors react. But my gut says it's priced in.
Landon Swan, thanks for coming on. I'll tell you what, if they send a corporate jet to fly me to Ann Arbor, Michigan to their headquarters, I'll give the presentation, and I'll bet you I can put a good spin on this. Landon, thanks for coming on as always. Have a great weekend. Have a great weekend, Landon.